Hi guys, thanks for tuning in to another episode of Nuggets News. Today, welcome a special guest from REN or Republic Protocol, and that is Long. So, thanks for joining us today, mate.
Hey, thanks for having me.
One of the most exciting projects in the DeFi space. We're going to talk all about dark pools and what's going on there. There's a lot of overlap with the traditional world and privacy, all the topics that are sort of topical at the moment. So I'm looking forward to diving into it all. But I guess I'd love to hear a bit of your background, because you're an Aussie, about just the short version of how you got into crypto and then into REN.
So I kind of got into crypto accidentally, almost. I was interested back in around 2013, which is when I first sort of saw Bitcoin, and I liked the idea of it from a computer science perspective, like this ability to have a trustless ledger of information that's being maintained. I wasn't super into the sort of cypherpunk down with the government vibe that Bitcoin had in its really early days. And I thought $50 was outrageous, which now I know it is outrageous, which is in the other direction.
Yes.
And then, so I sort of, I was interested in it. I learned a little bit about the technicals, and then I ignored it basically and continued with my studies and my work, which happened to be in distributed systems, which is why I was interested in Bitcoin in the first place. And I studied distributed systems, and I went on to study supercomputers and do some research in that space. And supercomputers are essentially just distributed systems when you get down to it. Built my own programming languages, met up with Ty at a startup, and then we started doing business together and started running development studios and working for all sorts of clients. And then in 2017, he wanted to explore the blockchain space because it was booming and there was lots of opportunity in that space. So I revisited it, and really, I guess with that many more years of interest in distributed systems under my belt, I was just a lot more interested in them than I was previously. And I think it's because Ethereum was around when it wasn't in 2013, and that meant you could do anything on this ledger, not just transact value. Yeah. And so really that's where our interest took off, and that's how I got into the space.
And what was that, I guess, real world problem that you were trying to solve, or something that maybe is already solved in the traditional finance world, but that gap that you saw in the Ethereum world? Because I mean, I really understand this problem well as someone that's traded. And for people at home that don't know what dark pools are, it's, when big wealthy investors want to trade big lots of shares, they don't want other people to know what they're doing and at what price and whatnot. Obviously, with public blockchains, everything's sort of transparent. So do you want to talk about all that, how it all tied together for you guys with the project?
Sure. So in the very early days, before we sort of changed and rebranded into REN and started exploring interoperability, where we started was with dark pools, as you mentioned. And we identified that dark pools are this system that exists in the traditional financial world, but don't exist in the blockchain world. And we had a hypothesis that this is because it seems impossible to build a dark pool on a blockchain.
Yeah.
You have a completely open ledger where everything is public, and you want to build essentially an exchange where all of the orders are hidden. How do you match orders if you can't see the orders? How do you execute trades if you can't see the amounts or the people between which they're trading? And of course, you had systems like Zcash around and zero knowledge proofs, but they turn out to be insufficient to build a dark pool in this way. So we explored a technology called multi-party computation, which basically gives you all this good stuff. You can have a network of machines running computations, guaranteeing that the results of those computations are correct. So very similar to what you get on a blockchain, but without revealing any of the information that's actually involved. And so you could build an order book into this system, and we did, and we went live with that in 2018. And the big problem at that time was liquidity. So the purpose of a dark pool and why you might want to interact with one is because you want to protect against slippage, essentially, and also against sort of like intent. So if you're a big trader and you want to sell $10 million worth of Bitcoin, you want to do this without having a big impact on the market. And if you introduce this massive supply, you're going to drive the price down, and you're going to get a bad price for it. If you do a hidden way that people can't see that there's a big sell demand, and it's you can sell it without that slippage. So obviously dark pools are primarily geared towards high liquidity assets. And the challenge that we encountered was that there isn't liquidity on Ethereum. Not by comparison to what you get on Bitcoin, and at that time Tether as well, which were the big tokens, and still are, that see all of the trading volume. And so at the time we were using atomic swaps. So you had this order book that we built inside our MPC engine, and then you would engage in an atomic swap between Bitcoin and ETH usually. And the challenge with that is atomic swaps suck, basically. So we realized very quickly that we needed to solve this interoperability problem. And we came to the realization that the MPC technology that we were using to build an order book can be used to solve the interoperability problem. And it's probably the most effective technology at our disposal these days to solve the interoperability problem. And obviously we wanted to solve this for the dark pool, but then we realized that interoperability is it's a much bigger picture, and it's something that the entire ecosystem can find value in. And so it became a natural expansion of our efforts to say, well, let's actually focus on this interoperability problem first, because dark pools don't even make sense unless you have interoperability and you have it in a really seamless way that is not even noticeable to the user. And so that's what we've been exploring for the last, all of 2019 and all of 2020 so far.
And I guess just taking a step back, all of this has just really become possible in the past 12 to 24 months in broader sort of computer science terms. With the ZK research, I know it's really pushing the boundaries, and we've now got the optimistic roll-ups and those sort of things that are looking even more promising again. So I guess sort of 24 months ago, this stuff maybe wasn't possible, or people didn't think we could do it on Ethereum or know how to do it, and that's come a long way. It seems with a lot of the projects that I'm seeing and reading about now that it's kind of research is done, they're implementing it. It's really cool to watch it all sort of come to life.
Yeah, I mean, I think what's kind of interesting in the space is that a lot of these crypto primitives have existed for a long time. Certainly multi-party computations have existed since, I think, like the 70s, but now we're seeing them applied to financial systems, which means that there are big financial incentives to getting it right and progressing the research. Whereas previously, at least in the MPC space, it was mainly military. And that's a very specific type of set of features that you want. But now that we're seeing financial systems being built, we're seeing a lot more money getting poured into this research, because what you can do with new technology is what's going to give you the edge, and what's going to make you a lot of money as a trader or as an investor. So certainly, ZK proofs, specifically around Starks, I think, have received a ton of attention, and rightly so, but also MPC. So the kind of MPC technology that we use, forms of it have been possible in the past, but the specific techniques that we use are ones that we had to invent ourselves as a team in order to fit MPC into the context of a blockchain, where you can't assume that nodes are going to be online all of the time. That's the big challenge. Is that. So
we've done tutorials with the Tornado Cash and things like that. So where does REN fit into everything, the DeFi Lego system, in your eyes? Will every Uniswap transaction in future possibly be private? Or how does this all tie in together? Or do you see it all, the liquidity coming to REN itself?
So our goal is not to have liquidity come to REN. I think that's a mistake that a lot of interoperability protocols make. What we want to achieve is to bring liquidity to other systems. Bitcoin has achieved all the liquidity, and Ethereum has achieved all of the applications. It would be crazy to try and uproot either of them and bring it to RenVM. So instead, RenVM says, why don't we just take Bitcoin and bring it to Ethereum? So anything that you can do right now with an ERC20 in a few weeks is going to be something that you can do with Bitcoin, and you can do it in a completely native way. So under the hood, RenVM is taking Bitcoin and it's creating an ERC20 representation of that Bitcoin on Ethereum. So
yeah,
you can do anything with it.
That was my next question, because we've seen wrapped Bitcoin for a while, and now we've got BTC. Recently, we've seen the Pi DAOs. Have you seen those come out?
Yeah.
So what is your approach? How is that different to the others? What are you going to name it? It's almost a lot of confusion now, because there's so many versions of wrapped ERC20 Bitcoin.
For the longest time, we were considering calling the ERC20 version just Bitcoin. We decided that was just going to be hella bad idea. It's called REN Bitcoin. We also support Zcash and Bitcoin Cash. So you have REN there and REN BCH. And we'll be expanding to Litecoin and all sorts of other chains very soon as well. But basically the difference is, if you think about wrapped Bitcoin, which was actually an initiative started by the REN team with Kyber and BitGo, It's doing the same thing. You're taking your Bitcoin, you're handing it over to a custodian. That custodian is giving you a one-to-one representation of Bitcoin, and it says at any time, if you give some of that representation back to me and I burn it out of existence, I'll give you back the respective amount of Bitcoin. Yeah. That's essentially what's happening. And that's how most interoperability protocols work at a high level. Now, with wrapped BTC, the challenge or the problem is that BitGo is the custodian. Yeah. So there's a centralized entity. There's a lot of permissions involved where there has to be KYC in place because they're a licensed institution. But there's also some advantages to this. As a large institution using Bitcoin and Ethereum, if something goes wrong, you want somebody to sue, ideally. So having a central entity that's the custodian is appealing for those reasons. Now, in the more permissionless, trustless world, obviously that's a big no-no, having a centralized custodian. And so RenVM aims to mimic this same process, but A, to improve the user experience, and B, to get rid of that centralized custodian. And so the RenVM network replaces the custodian with this MPC protocol. And so all of the computations required to take custody of the Bitcoin are happening in the secret environment. Mm-hmm. And no one can compromise that environment unless they can collude with a large number of participants in the network, which is sort of your usual blockchain safety idea.
I was going to say, what's the on-chain, off-chain side of things here? Are you waiting for a Bitcoin transaction? Is this using the time-lock contracts, or how does that work to go from one to the other?
So it doesn't use any time-lock contracts. Basically, what happens is you send Bitcoin to a RenVM address that's controlled by RenVM, controlled by this sort of decentralized custodian. And RenVM will witness that transfer, and it will give you the right to create the same amount of REN BTC on Ethereum yourself. So RenVM exists as a completely off-chain network, and it just kind of observes events that happens on other chains. And says, okay, I've seen that you've given me Bitcoin on the Bitcoin blockchain, so I'm going to give you the ability to create REN Bitcoin for yourself on the Ethereum blockchain. And one of the neat things about RenVM is that you can do this in a way that encapsulates the application intent as well. So if you actually want to do something with that Bitcoin on Ethereum, you can use just a single Bitcoin transaction to actually make that happen. So if you wanted to buy Zcash, let's say, on Uniswap, it's possible to, with a single Bitcoin transaction, make that purchase. So you say, this is what I want to do. RenVM says, great, send your Bitcoin here. You make that transaction, your Bitcoin transaction, and once RenVM has seen it for you, it essentially drives the rest of the application that you were trying to interact with and eventually gives you your Zcash. And so from your perspective, you just made a Bitcoin transaction and received Zcash, and all this complexity is hidden from you.
So what's the limiting factor? You said Zcash, Bitcoin Cash, Litecoin, I think I've heard you talk about as well. What's the criteria that you guys are looking for, or technically what do you need to take these assets onto REN?
So there's kind of maybe 2 or 3 criteria. The first criteria is that at the moment, it has to be something that uses an ECDSA signature. So most blockchains fall into this category. There is some hope that we can expand to other signature formats, but we haven't actually done extensive research in that space yet. Yeah. The second is there has to be some form of scripting capability. Very simple. It only has to be as powerful as Bitcoin's, and even Bitcoin is a little bit more powerful than it needs to be for RenVM. Yeah. So you don't need much. And lastly, there needs to be some level of value that is accepted by the community. Because at the end of the day, the people powering RenVM, they're taking a fee. So every time Bitcoin moves from the Bitcoin blockchain to Ethereum, the dark nodes, as we call them, they take a small amount of that Bitcoin and they get it in Bitcoin itself. And the reason we do that is because it prevents the user from having to fiddle with other tokens. They just they pay the fee in the token, in the cryptocurrency itself that they're moving. So, and it's the same. If you move Zcash to Ethereum, then the dark nodes earn a little bit of Zcash. If you move Litecoin to Ethereum, you get a little bit of Litecoin. And so, the dark nodes are earning this diversified bucket of income. But then at the end of the day, they have to be the ones to ultimately approve the addition of a new asset. Because if we wanted to suddenly bring in, Bitcoin, or I think that is the thing.
Doge.
I don't want to, Doge as an example. If the dark nodes in our community look at that and say, well, we don't see any real value in Doge, then they're not going to want to earn fees in that token. And so they're not going to adopt that asset. So really it comes down to sort of those two technical requirements and then that sort of governance requirement.
So you mentioned getting the fees paid in the assets traded. A lot of other projects are sort of always paying out fees in their own token. Do you want to talk about the REN token? I know you've got to lock that up to stake and be one of the dark nodes. How does that work? Are there tiers? Can anyone start doing this? And how are those tokens paid out if the fees are getting paid in the other asset?
So we were very intentional with keeping the use of REN as slim as possible. And the reason for that is it's being able to understand the value of REN clearly is fundamental to the security model of RenVM. So if you're inflating it or if you're using it to pay fees, it becomes very difficult to understand how to price this asset. Whereas by saying it's just a bond, so anyone with 100,000 REN can create a dark node and start earning their portion of fees, it becomes very easy to value how much 100,000 REN should be. You look at the amount of fees that you're earning, the number of dark nodes that are in the system, and then you apply whatever sort of discount or future value model that you want to apply, and then you can come to a fair valuation for what you think a dark node is worth. And one of the benefits of this kind of model is this sort of positive feedback loop in the underlying economic factors that make RenVM work. So you want to have more REN bonded in the system in terms of value than you have assets moving between the chains or locked up away from home, if you will. Otherwise, there's a strong incentive to compromise the system and steal money. So if there's $100 million worth of REN bonded into RenVM, but there's $1 billion of Bitcoin sitting inside RenVM, then it's obvious that you could go to everyone, buy out the whole network for $500 million and still make $500 million in profit. So you've got to limit these. And the idea is that by having a clear valuation for REN, as the system is getting used, it should be impossible to arrive in a scenario where there actually is $1 billion of Bitcoin sitting in RenVM and have the REN price be lower than that amount. Because the fees that RenVM is earning in order to actually hold that amount of Bitcoin and the associated movements back and forth are going to drive the value of REN up. And if they don't, then RenVM can come in and it can actually start adjusting those fees. And so it says, well, actually, for whatever reason, the market forces aren't playing out such that REN actually is of a higher value. So we're going to increase the fees, which will increase REN. But it also has the other nice impact of decreasing the amount of value inside RenVM. Because if you're paying a ton of fees to keep your Bitcoin inside Ethereum, you're going to start moving it out because it's not actually it's not profitable for you to keep it in Ethereum. And so you can start lowering the value inside RenVM while also increasing the value of REN itself, and you can keep that economic balance.
Are there any bots or arbitrage smart contracts looking at that and doing that automatically, or is that something that people are sort of manually looking at and arbitraging? And or is in the future will that change to be a more automatic process?
So ARB is what you would expect to keep the price of REN BTC the same as BTC. So if BTC is $10,000 and REN BTC is trading for $11,000, it's really obvious that you should buy BTC, transition it into Ethereum and sell it there. And so you would expect ARB to equalize the price of Bitcoin across various chains. Yeah. You wouldn't expect it to equalize the price of REN itself. You might see sort of like mean reversion ARB happening where you as an outside person who's not interested in the ecosystem at all can apply this valuation model and say, well, we see that REN is earning whatever it is, $100 million per year from fees, but the total network is only valued at $50 million. And we think it should be valued more than that, so we're going to buy it up and sort of hope to profit off its true value.
Yeah, arbitrage probably wasn't the right word. You're right. I'm thinking about it in terms of different models. So what's the cost roughly at the moment to start running that? Did you say 100,000 REN? So what's the cost of that at the moment?
So I think that's about 5,000 US.
Oh, cool. So
depending on the day,
a lot cheaper than when a Dash Masternode got up to $1 million over that bull market.
Yes.
Okay, cool.
So the idea is that anyone should be able to run one of these things within reason.
I know further on down the line, if you can't afford the $5,000, they're looking at ways to get 5 friends with $1,000 together to do that. Are those sort of things in the pipeline or not really?
So those are things that we're hoping third-party enthusiasts are going to come in and build for us. We're not looking to build an official one because our stance is that that kind of collaboration is actually dangerous because you can get you might get 5 friends together, but chances are you're actually going to get 5 strangers together.
Yeah.
And those strangers are going to have to trust someone with their money and to run one of those nodes, which kind of compromises the idea of decentralization. And I think that in reality, what you're going to see is things closer to the kind of controversy we saw around Binance and Steam.
Yes.
And those kinds of things happening. And we don't want to encourage that. We've intentionally built RenVM to be resilient to that potential kind of behavior, but we still think as far as a culture goes, we want to drive away from that concept.
So I want to get a little bit technical without putting people to sleep at home, just to understand how this all works. Because I know the decentralized computation is one challenge, but then privacy in encryption was another challenge that a lot of teams have been trying to solve for years, like, golems of the world and that sort of thing. So from what I've read, you guys are kind of splitting up the keys in a way that it's between nodes, none of the nodes. Maybe I'll get you to explain this best, how it all works, but how does that work to process the data in an encrypted fashion, but all the nodes still don't know what the data is?
So the best way to think about it is lines. And it's quite an easy concept to think about, but it's also exactly how it actually works mathematically. So if I gave you a point in space and I told you this point was on a line, you would have no idea what that line looked like. But if I gave you 2 points in space, then you know exactly what this line looks like everywhere in space, right? You can sort of extrapolate it however you like. Yeah. So that rule holds generally, and the more complicated the line, the more points you need before you know what the line looks like everywhere in space. So basically what we do is we pick a point in space and we say that's where we're going to put our key at the x equals 0 on the y-axis. We're going to pick a number and put our private key there, and we're going to create a crazy complicated line that goes through that point. So unless you have enough points on this crazy complicated line, you can't know what that line is going to look like at x equals 0. And so you can't know what the private key is going to look like. And you can do this in such a way that you don't even gain more information as you get more points. You have no information until you have enough points, and then you have 100% of the information. And so that the number of points you need to collect, that's kind of our threshold. So whatever the number of nodes is in our system, we say 1/3 of that's the number of points that you need in order to break the secret and see that private key at x equals 0 on that line.
Fantastic. That is probably a little bit over most people's heads, and it's right at the edge of my knowledge as well. But I always do enjoy trying to understand these topics, because it is a challenge, isn't it, that all teams are trying to solve in different ways. And from what I understand, a lot of teams have now solved that. From, as I mentioned, Golem and yourself, and it sounds like we've kind of got to a point now where processing encrypted data in a decentralized fashion is very doable in the real world.
There are lots of different techniques. I think a lot of them have advantages and disadvantages. There's some that I like better than others. Homomorphic encryption is another alternative where you're not breaking up your data, but you're encrypting it, but you're doing it in such a way that you can still do computations on it while it's encrypted. And then the answer is going to be encrypted as well. Yeah. That has its own disadvantages. MPC is obviously what we use. That's particularly effective at certain computations, and it can be heavily optimized, but it's actually very hard to make it general purpose without making it very slow and consume a lot of network bandwidth. And we put a lot of research and effort into making that as efficient as possible. There's also zero knowledge proofs, which are kind of they're a different idea of privacy, where someone knows what's going on and they can just kind of attest to the correctness of a result.
Yeah.
And I think we're going to see combinations of all of these approaches applied at the end of the day in order to achieve what might be traditionally thought of as privacy.
So you guys recently launched your mainnet. What sort of transactions per second is that doing at the moment? What are the headwinds that you're still looking to solve? So at what point is all that at the moment in terms of the technology?
So we haven't actually launched our mainnet yet.
Oh, sorry. Did I read something about a testnet or something? Or?
So we launched what we call Chaosnet, which is on mainnet.
Yes.
So it is technically a mainnet,
okay,
but it's pre-audit. So we don't encourage people to use it for production purposes. The reason we did it, well, there's two reasons we did it. One is that no one uses testnets. So it's very hard to actually test economic incentives on a testnet because there's no real value at play. So by putting a testnet environment on mainnet and kind of just reducing everything, so it's only 10,000 REN to run a dark node on Chaosnet, for example, and by discouraging people to use it heavily, you sort of scale down the usage intentionally because you don't want people to lose money. That still allows us to do a little bit of testing, get a feel for what we might be expecting when we come mainnet. But obviously without an audit, it's not to be used for production. So the other reason is that there are actually subtle differences between Ethereum testnet and Ethereum mainnet, or Bitcoin testnet and Bitcoin mainnet. If nothing else, the address formats are different, as an example. And so you want to be able to have a testing environment that is on mainnet to make sure that you haven't missed one of those differences, and that when you take your thing from testnet to mainnet, it's suddenly going to fall over because you forgot that, the addresses are different, for example.
Yeah.
But yeah, our mainnet is coming out in a few weeks. I can't give an exact timeline because we're basically just waiting on our auditors. So that is quite an unknown and very hard to predict back and forth process.
Is that QuantStamp or Zeppelin? Who's doing the audit?
So we're getting audited by two teams. One is Chain Security and the other is Consensus Diligence. So they're auditing different parts of our system.
Fantastic. What are some of the other applications? I know we've spoken about dark pools, but I've heard you talk about, really anything is possible, integrating with a lot of the DeFi Legos, voting, any sort of data processing and whatnot. So is there any projects or conversations you've had, other things that you think are going to come to Republic Protocol first?
We are quite focused on interoperability at this stage because it's a big mission in and of itself. And then after that, we're anticipating that we might extend the protocol into more general forms of computation. The one that I'm particularly interested in right now that I see a lot of promise is random number generation. So one of the things that RenVM does really nicely is it generates random numbers that no one can influence or bias in any way. So with even a single person acting honestly in the system, you can guarantee that your number is uniformly random. And you can also keep it hidden as well. So you can actually generate these random numbers and then only reveal them to certain people at certain times under certain conditions. And this turns out to be a very useful thing to have when you're building other protocols or when you're building other applications. For example, if you want to build games that have some level of chance involved and you want that game to be on chain, it can be useful to have access to secure random numbers.
Yeah, I think that's a really interesting concept for people at home if you haven't read about it. It's actually very hard to generate a random number, particularly in the world of computers. What do you tell it to do to generate something random?
Yeah, and how do you define what securely random means? When you first get into the space of what is a random value, it's actually it seems all really silly, and then you suddenly realize how insanely complicated it is to define randomness.
Exactly. Anything else that we haven't touched on today, Loong? I'm really, really interested in the overlap of bringing the traditional world of derivatives and options and all that into the crypto and DeFi space. Are you passionate about investing, or is it more just this computer science side of things, or where do you see it all going in the future?
I'm certainly passionate about I'm getting more interested in and more passionate about the specifics of finance on the blockchain. I think, initially my involvement in this space a few years ago was a deeply technical one. But I think, and this is true of a lot of people that spend time in this space, you start seeing more of the value around what it means to have a permissionless system. I think, we're seeing a lot of opinions out there, especially on crypto Twitter right now, with regards to recent stimulus packages happening around the world. Yeah. And monetary policy and whether that monetary policy is sound. And I think at the end of it, this idea of being self-sovereign over your own financials is critically important. And I think we might see more world events happening over the coming years that really continue to highlight that, especially under recent circumstances. And I hope that at the very least, we're able to, if we don't achieve this fully decentralized, governmentless system, that at least we achieve better systems that have more oversight, that can't just be changed on a whim, that you can actually fundamentally enforce certain behaviors instead of just kind of relying on politicians or regulators to decide whether or not they want to enforce things.
It's probably one of my favorite parts of this system as well, getting to have conversations like this with people that maybe haven't taken the deep dive into what happened in the last bailout. And then you say to them, well, imagine using the technologies we have at our fingertips now to say, well, where is that 2 trillion of bailout going? Can you prove that 1 trillion didn't go to Jamie Dimon and reveal that it went to a bank outside the US that needed it without revealing who it is? So it's all these concepts that are tying together that I think we need more transparency in the world of traditional finance, and a lot of it is going to be eaten up by Ethereum, I think.
I think you are probably very correct on that front. I think our biggest challenge ahead as a community is bringing other people into this conversation. I I think you probably know as well as I did, when you talk to people outside of this ecosystem, it's so hard not to sound like a conspiracy theorist, or like you put on your tinfoil hat and you start talking about the government and how they're controlling everything, and it's very hard to make a convincing argument without sounding just a little bit crazy. So
that's kind of where the speculation is important, and a lot of people are watching this and saying they try to talk to their friends and family about it and they're not that interested. Some people are more interested now that there's the crash taking place, but when we have that next run up in price and all of a sudden people are like, well, hold on, how did you make money from that interesting thing you were telling me about? That's what brought a lot of people in 2017. As much as it sucks we have to go through that cycle of euphoria and then crash, I think it actually plays an important role of bringing people into the system. And I think we're sort of coming out the other side of what's been a very long sort of crypto winter of people building and whatnot, and just perfect timing of what's happening around the world with the financial system and the point where DeFi is at. It must be very exciting for someone like you, just watching all these DeFi Legos coming together and knowing what's possible.
Yeah, it is really awesome to see a lot of stuff that's been in the works for a long time beginning to come to fruition. And I think long bear markets like this, they really help differentiate between the projects that are serious and the projects that are just there because it's a space that's exploding.
Absolutely. Well, I'll put all the links to follow you and Ren down in the description below. We'll definitely have to catch up next time I'm up on the mainland. It's awesome to see another great Aussie and good Aussie project and whatnot. But any final thoughts for people at home, Loong?
No, just check out our material. Come find us on Telegram and Twitter, and obviously stay safe over the next few months.
Fantastic. Thanks so much for joining us today, mate. Cheers.
Yeah, thanks so much for having me.
Thanks, guys.